So if you watch this channel, you probably know that my channel is primarily about stacking physical gold and silver, just like what I have in my hand right here. And I really do live by that saying of if you don't hold it, you don't actually own it. And that very much bodes true for what I consider to be real money like gold and silver. That being said, and I'm not going to sugarcoat it, today's video is an interview with a CEO of a gold mining stock. His name is Tim Smith, and he is from US Gold Mining Inc. Now, the reason I have Tim on here is because I also do invest in stocks. And with stocks, and again, I'm not going to sugarcoat this, stocks are incredibly high risk, but possibly high reward investments. You are not stacking gold and silver as an investment, or at least I'm not. I don't know what you're doing, but I don't stack gold and silver as an investment. I stack it as a way to protect my wealth. In other words, to have an insurance policy against the collapsing dollar. Whenever I invest in stocks, like a mining stock or any other stock like Tesla or Microsoft or Amazon or whatever it may be, I always do so knowing that there is an incredibly high risk that I lose a lot, if not all, of my money. That is not something I ever think about with gold and silver because I know it's always going to be there and it's always going to hold value. So before we get into today's interview with Tim, I just want to go in letting you know that you need to make your own decision when it comes to investing in stocks. Now, we're going to ask Tim some questions about the gold market. We're going to ask him some questions about his company as well. But more importantly, there's going to be a link to his website down below as well as his stock ticker. And of course, everyone watching this video right now also has access to Google. So do me a favor, before you decide to invest in any stock, including this one, don't just listen to Tim, but go ahead and do your own research and make your own decision. As always, I am not a financial advisor, and I certainly will not recommend or recommend against any stock, period. That being said, I would love to have Tim get in here and tell us what he thinks about what's going on in the market and a little bit about his company. So let's welcome Tim to the channel. Tim, how are you today?
Doing really well. Thanks very much for having me on the show. Delighted to have the opportunity to be able to raise awareness about our new company, US Gold Mining Inc., which we launched just recently via an IPO, and which is now trading on the NASDAQ under the ticker USGO.
Absolutely. And I've been watching you guys for the last few weeks since you launched that IPO. But before we get into it, I would love to ask you a couple of questions about the industry. That's what people want to know. And I'm going to start off with the debt ceiling. We're fast approaching. I think the last thing I read was it's around June 1st is when it's going to hit. And as it always happens, the government, they get into their arguments about how it's going to go about, and everyone wants their own thing written into, whatever bill is going to raise that debt ceiling. But I think for us, the important question is, how is that going to affect gold or silver, especially if we hit that day and we see another government shutdown? What are your thoughts?
Yeah, look, it's one of a number of factors that's really supporting our thesis on why there's a lot of upside in the gold price right now. So, with this debt default situation looming, if that happens, not only will that obviously have a devastating impact on the US and even the global economy, but future debt terms, when they do finally sort this mess out, are going to be struck at much higher interest rates. So we're going to be just locked into this continuing cycle of higher interest and inflation. Guess who that ultimately gets passed on to? We, the common folk, with our loans and mortgages and families to raise, and really just the uncertainty around that situation right now is supporting the gold price.
Absolutely. And bringing up that gold price, I mean, today it's dropped a little bit. It's actually the first time I've seen it drop below 2,000 in weeks. Do you think that is something going to continue? I mean, should we see it start to pull back? Because I've been reading a lot of reports of people talking about how it's actually going to dip and not get stronger. But what are your thoughts?
Look, we think there's a lot of runway for continued upward gold price. Look, it's been a great year for the price of gold so far. We think that's just the start. And, I want to double down on that because in my 28 years in the gold mining industry, I don't think I've ever seen a setup quite like this current economic situation as a precursor to what we think is going to be a major bull market. And, let me break it down to you. We just talked about the debt ceiling, but, inflation is an ongoing concern. We're hearing that it's slowing down somewhat over the past couple of quarters. But again, news out of Canada today, guess what? It was up again in April. And we all know that, we all need to put gas in our cars and buy groceries for the families. We know it's out of control. It's certainly impacting the dollar. Recent economic data just reported yesterday by NASDAQ, it's pointing to more, increased recession fears. These factors are really supporting safe haven flow to gold and obviously supporting the gold price that we believe is building a base at around about 2,000. Yes, there's some fluctuations on a day-to-day basis, but I think for about the last month and a half now, it's hovered between about 1980 and it's hit a high of 2050 just last week. We've seen it sustained well over 2,000 for about the last couple of weeks now. We've seen it spike in the past couple of years, but we haven't seen the sustained base being built. So that's what's really exciting us. I think as we continue to see the dollar struggling for traction against some of the other major currencies around the world, it's losing a little bit of its luster, and a weakness in the US dollar always supports strength in the gold price. So these are things that are supporting the current base. But what do we think is going to help really drive the gold price higher? Well, a key factor for us is that gold supplies are reducing. We're seeing that the largest gold mining companies, they're not replacing their reserves in the ground. They are in fact depleting as they mine their way through the reserves. And I just spent the last 6 years, before I came to work with US Gold Mining Inc. about a year ago, I spent the last 6 years working for two of the gold majors. First of all, Goldcorp, and then Newmont, which by the way is the world's biggest gold miner. And the only way Newmont can continue to sustain its 6 to 7 million ounces of gold production per annum is from acquisitions. And I know this because I was the head of generative gold exploration for Newmont North America, and I can tell you they really aren't exploring. But of course, they are acquiring Goldcorp, first of all, in 2019, GT Gold, a Canadian company in 2021, and now the massive merger with Newcrest, a big Australian gold miner, which is happening right now. And another thing that's really supporting the upward pressure on gold, it's well documented that the central banks are loading up on gold. The World Gold Council just recently reported that there's an increase in demand for gold and other institutions every quarter since at least Q1 of 2022. So, we're looking at around 18 months of sustained significant increase in buying, and that included a 228% increase in Q1 of this year alone. And that's the highest amount of central bank buying, by the way, since 1950. Ongoing geopolitical tension in the world means that gold is a safe haven and a store of value should increase in price. And, we're well aware of what's happening in Russia, Ukraine. China, Taiwan is another example. There are a lot of other smaller conflicts going on. And, finally, you don't just have to take it from me. Some of the biggest names in the industry are calling for a major increase in gold price. And Pierre Lassonde, the founder of the gold royalty business, was quoted just recently saying that gold is going to hit 2,400 in the medium term, but over the next 5 years, it could get anywhere up to 10,000 and up to as much as 25,000 over the next 30 years. So, these are some of the biggest names in the gold industry. They've made fortunes in exploring, building, and trading in gold companies. So it's not, all just speculation.
So let's talk a bit about gold mining. And from what I've read, based on your current market cap, your 9.4 million equivalent ounces of gold resource comes in at around $17 an ounce. Now that is well under the market average of around $40 an ounce. Can you tell us how that brings value to your shareholders?
Oh, absolutely. We think there's a fantastic opportunity to continue to increase the value of our asset. And let me just break down the asset fundamentals for a minute here. So US Gold Mining Inc. owns the Whistler Gold Copper Project, which is located in Alaska. It's the nearest large deposit to the main city of Anchorage, just 105 miles. We think it's a unique opportunity for investors in terms of size and location, and there's some other key catalysts that have recently come into play. It's a large, previously unmined gold copper deposit, so never been mined. And it comprises around 3 million gold equivalent ounces in the high confidence indicated category, and another 6.4 million gold equivalent ounces classified as inferred. So, if you add that together, around 9.4 million ounces. And when you look at our market cap that right now is around about 180 million, if we subtract the $20 million that we currently have in the bank from our recent financing via the IPO, then the enterprise value of that 9.4 million ounces of gold equivalent resource sits at around about $17 per ounce. So, what I want to compare that $17 per ounce against is the global median of about $40 per ounce for equivalent projects at the development stage. So, we launched the company at $10 an ounce, which provided great value and obviously a lot of upside. The market recognized that. We received very enthusiastic response. That's testament to the value proposition. And the market, I think, is just in the last couple of weeks has started to cotton on to the fact that there's a big delta between our current valuation and that average of 40 to 50. So we see significant growth potential as we advance the project via our planned exploration and studies, which will be starting this coming summer.
So beyond the planned exploration and studies, what other plans do you have to unlock that price potential for your stockholders?
Yeah, so over the next couple of years, we're going to rediscover Whistler for the market. Whistler, as a deposit, has not been drilled since 2011. So we're going to put the first drilling into the project this year. So we're looking forward to bringing news flow to the market and updates on other mine engineering studies that are going to run in parallel to take the project to the first mine scoping study, or sometimes we refer to that as a preliminary economic assessment. So that's the first study that really wraps potential mining economics around that deposit of gold, copper, and silver in the ground. Beyond that, as we then continue to advance the Whistler project further into what we call feasibility study. Now, this is preparing the project for development and for financing. So at that stage, we believe we will see another re-rate, which could see multiple increase of around or up to around $100 per ounce. And again, that's the median that we see across the industry. So we're comparing Whistler against other deposits around the world. And so we believe, there's a strong chance that as we grow and advance Whistler, that we will see that multiple return for our mine, future potential mine asset at Whistler. An example of that, in my past, when I was VP of exploration for a company called Kaminak Resources from 2010 to 2016, we made a discovery in Canada, in Yukon, of around 3 million ounces indicated in the ground. Now, Goldcorp in 2016 acquired that company for around Canadian $520 million, about $500 million, and that equated to $130 per ounce. US dollars, $130 per ounce. So you can see the delta from, a discovery, or in our case, Whistler, which is around $10 to $17 per ounce. And as we advance it to get to that $40, $50 per ounce at the PEA stage, and then ultimately feasibility heading into production, we're seeing valuations well in excess of $100 per ounce. And there are lots of other examples over the past several years where larger companies have paid well over $100 per ounce for quality deposits in safe jurisdictions.
So that's definitely something to look forward to, but we had talked earlier about inflation. How would that impact those plans?
So, inflation, I guess we all said during the COVID pandemic with the economic lockdowns that, we're going to be paying for this for years. And so here we are a couple of years out, in the post-pandemic inflationary surge. Inflation is slowing in some data, increasing in others. I mentioned earlier that, news out today just in Canada is that it continued to increase through April. So it's still something that is obviously high on the minds of many people. In terms of our deposit operations, we've done our best to plan for it. We've certainly worked inflation-adjusted costs into our plans and our budgets. In general, our sector, the exploration sector, has, I think, seen it stabilize over the past year. With respect to our major cost in particular, which is drilling costs. And look, overall, we have a very experienced management team. I have 28 years experience across Australasia and the Americas. My colleague, Alistair Still, who is our executive chairman, a veteran executive, mining executive, has built mines and run corporate development for the majors for over 20 years. We have a veteran board, so we know how to extract value out of the ground. We know how to do it efficiently. We've done it before. We've delivered on growth for our shareholders, and we have every confidence that with the strength of our asset at Whistler and the treasury that we have, that we're going to deliver again for US Gold Mining Inc. shareholders.
All right. Well, that sounds really great. But as always, whenever I do these interviews, I always want to kind of open the floor up and just make sure I didn't miss anything that you wanted to share with the viewers about what gold mining can provide to its shareholders and anything else about your future plans as well.
Thank you. Yeah, look, maybe just a couple of things. I think, location and access. Uh, Alaska is a vast and mineral rich state. Um, Whistler is just 100 miles from the largest city of Anchorage, the economic capital, if I can use those terms, of Alaska, the largest population center in the state. It's a major transportation hub and obviously a stepping stone to Asia. And furthermore, the terrain in that part of Alaska is very accessible and amenable to future mine development. So Whistler, just 100 miles from Anchorage, it's in low line, almost plateau-like. It's very lightly forested. We're not talking polar bears and glaciers, because I think that's sometimes the image that people get when they think about Alaska. There are no lakes, no mountain ranges, no glaciers for us to deal with. And another critical factor, we're on state-owned lands, so we're not on BLM or federal land or native-owned land. We have a camp that's built, ready to go, situated right next to an operational airstrip, and a trail that connects the camp with the Whistler deposit just a few miles away. Our exploration activities are fully permitted and are good for 5 years. So we're basically ready to launch this coming summer. And one final thing I'll leave your viewers with, which we believe is a major catalyst. We love Alaska. It's a great jurisdiction. Exploration and mining in Alaska has very strong local support at the community, at the regulator, and most critically at the state political level. And a key catalyst and potential game changer for us at the Whistler Project is a Roads to Resources program launched by Governor Dunleavy's administration in the last couple of years. So I mentioned just 100 miles from Anchorage to Whistler. The state's plan is to build a road. They've already put $8.5 million into the design, the environmental baseline, and the community consultation to building that road. They recently announced they want to start building it as early as 2025. And guess where that road leads? It leads directly to Whistler. And it will connect Whistler with a port facility at Port Mackenzie, which is just opposite Anchorage Harbor, that will allow us to bring both equipment and consumables in cheaply and efficiently, and also importantly, ultimately, to truck gold and copper concentrate out and export it via that port. So this is some major infrastructure that's going to have a significant impact in lowering our upfront capital costs. So we're very excited about that. I'm very grateful that the state has these very proactive pro-investment policies, and we're certainly very happy to be investing in Alaska on the Whistler Project.
All right, Tim. Well, that all sounds great, and thank you for joining us. For the people watching right now, I want to let you know that all the information, including links to us.goldmining.com, their website, as well as their ticker, USGO, is available. Make sure you go check them out. And Tim, I cannot thank you enough for joining us. I hope to see you again.
Thanks so much for your time today. Happy to come back anytime.